Okay, so we continue with part 3 for question 21 until 35. Okay, all right. So the draft financial statements of a limited company showed retained earnings of 31,820. It was then found that no adjustment had been made for the following. What was the correct amount of the retained earnings? Okay, so retained earnings is like profit. Okay, so they said the draft profit is 31,820, but they said that you have commission receivable accrued. So commission receivable accrued, what you need to do, it will increase your profit because it should included in the current year income statement, in the current year profit. So this one will increase profit. Insurance prepaid. Okay, insurance prepaid cannot include in the current year income statement. So you need to deduct it from your expenses. Okay, when you deduct from your expenses, okay, you need to reduce your expenses. So when you reduce expenses, what happen? Obviously, your profit also increase. Okay, so what will happen? So 31,820, you plus 3,450, and you plus also 175. Okay, so the total amount will give you 32,445. Okay, so the answer is D. Okay, which statement about club account is correct? Okay, capital and revenue transactions are recorded in the income and expenditure account. Okay, they said capital and revenue transaction. Okay, wrong for the capital. Only revenue transaction is included in the income and expenditure account. Non-cash transaction are recorded in the income and expenditure account. Yes, can be. Non-cash transaction can be included. Okay. Only revenue transaction recorded in the receipt and payment account. No, doesn't mean only revenue transaction. Okay, can be also any expenses or capital transaction also can, because it's receipt and payment. Receipt and payment is like cash book for club. Okay, the closing balance in the receipt and payment account could represent surplus or deficit. Wrong. Okay, so receipt and payment, like I said, because it's like cash book. So basically, they will show how much the balance of money in your bank account. Okay, so surplus and deficit is for what? For income and expenditure account. Okay, so the correct one should be B. Okay, sports club provide the following information for the financial year ended 31st December 2021. What was the total of the subscription that related to the year ended 31st December 2021? Okay, you need to understand first. Okay, first one, you have 1st January 2021 subscription paid in advance. Okay, when you are paid in advance, okay, that you bring from last year to this year, so means that this one is basically is a, whether you need to know whether it's a current asset or is a current liability. Okay, so when it's a paid in advance, okay, when there is a, because this talking about subscription is your income, so when they have income is advance, this one is your current liability. Okay, it's a current liability. Okay, so 31st December subscription outstanding. Okay, outstanding is your subscription outstanding is your current asset. Okay, understand first like that. And subscription received the year 8,800. Okay, so what you need to do, you open subscription account. Okay, you open a subscription account. Okay, so we put first this one consider as balance BD lah. Okay, this one can consider as balance CD. Okay, so we start balance BD because it's a current liability. Current liability means what? It's a credit. Okay, so BD here 200. Okay, and then you have balance CD. Okay, this is current asset. Okay, supposedly current asset is debit. Okay, so supposedly if you have, because this one 31st December, so if you bring to next year, it will be here. But because it's CD, it must be opposite. CD 450. And subscription received during the year. When you receive money, obviously you will debit bank. When you debit bank, you credit subscription. Okay, you can put the detail bank 8,800. Okay, so you plus all. Okay, all of this, when you plus, you will transfer to income and expenditure account. Okay, so 200, you plus 8,800, you plus 450. So we give you 9,450. Okay, the answer is D. Okay, 24. The work in progress ZT manufactures on 1st January was valued 6,200. Okay, at the end of the year, it was valued at 4,400. So basically, this is the beginning work in progress. Beginning work in progress. This is ending work in progress. Okay, to find the cost of production, okay, so basically if you do manufacturing account, so basically you start with prime cost, okay, prime cost, and then you plus with factory overhead, okay, prime cost plus factory overhead, and then you plus with beginning work in progress minus ending work in progress. Okay, so beginning work in progress is 6,200, and then you minus 5,400. So basically the difference is by 800. Okay, so this 800 is positive. It will increase or decrease your cost of production. Obviously increase because it's positive. You need to plus everything. Means prime cost plus factory overhead and also plus with the difference of beginning and ending work in progress. So because it's positive, so it's increased 800. Okay, next 25. Manufacturing company provide the following information. What was the cost of sale? Okay, they give you cost of production 345,000, beginning finished goods 42,000, ending finished goods 36,000, and purchase of finished goods 15,000. Okay, so they asked you to find cost of sale. How to find cost of sale? Okay, so how to find cost of sale? So basically beginning inventory, okay, plus purchase of finished good if you have, okay, plus purchase, okay, plus purchase of finished goods, okay, and then you plus with cost of production, okay, cost of production, and then you minus ending inventory. Okay, so beginning inventory is 42,000, okay, plus purchase of finished goods 15,000, okay, plus cost of production 345,000, and minus ending inventory 36,000. Okay, so 42,000 you plus 15,000 plus 345,000 and minus with 36,000. So equals to 366,000. D. Okay, next, now 26, Tahir provide the following information for his first year of trading. Tahir gross margin was 25%. What was the value of the closing inventory? Okay, what is the formula of gross margin? So gross margin, the formula is gross profit. Okay, gross profit you divide by revenue. Okay, multiply 100%. Okay, so basically what you can do, maybe you can find, because we already have the gross margin, we have the sales. Okay, let's find the gross profit first lah. Okay, easier for you. So because later we want to find closing inventory. If you want to find closing inventory, it's basically inside the we can find inside the gross profit actually. Why? Because why? Gross profit also can be revenue minus cost of sale. How to find cost of sale? Beginning inventory plus purchase minus ending inventory. Okay, so gross margin is 25. Gross profit we want to find first. Revenue is 170,000. Multiply 100%. Okay, so you get your gross profit equals to, okay, let me press calculator. So 0.25 multiply 170,000. Okay, and then yeah, so 25 divided by 100%. Okay, so and then you multiply with 170,000, so you get 42,500. Okay, so let's find first the cost of sale lah. Okay, because you already got the gross profit. So gross profit you got 42,500. Revenue or the sales, oh sorry, because I forgot to minus with the sales return just now. I just noticed got sales return. So basically the you need to find the net revenue, net revenue after minus sales return. So basically this one need to do some correction a bit. Okay, sorry. So 170 minus with 6 first. So 170, sorry, 170 minus 6, so it's a 164. Okay, 164. Okay, so 0.25 multiply 164 is a 41,000. This one net sales must be net revenue. Okay, just notice just now. So the revenue is 41,000. Okay, minus with the cost of sale. So how to find cost of sale? Okay, so if the revenue, okay, so basically because gross profit just now. So, okay, let's do again. Okay, so gross profit just now we got 41,000. Revenue 170 minus 6. So just now 170 minus 6 is 164,000 minus cost of sale. So your cost of sale equals to, so 164 minus 41. 123. Okay, so now we want to find closing inventory. So in this question do not have any beginning inventory, so we just ignore the beginning inventory. So purchase we have 129,000. So we want to find ending inventory. Okay, so ending inventory equals to 129 minus 123 equals to 6,000. C. Okay, 27. The business provide the following information. What were the purchase for the year? Okay, rate of inventory turnover. What is the formula for rate of inventory turnover? So the formula is cost of sale divided by average inventory. How to find average inventory? Beginning inventory plus closing inventory, you divide by 2. Okay, so we want to find cost of sale basically here. Alright, so we have the rate of inventory turnover is 5. Okay, so cost of sale we need to find first. Average inventory, opening and closing, and then you divide by 2. 6,800, you plus 6,000, divide 2. So 6,400. So cost of sale you get 6,400 multiply 5. 32,000. Okay, the one purchase for the year. Okay, you already have the cost of sale. So just now I repeat, what is the formula for cost of sale? Beginning inventory plus purchase minus ending inventory. So this one 32. Just fill in the blank. 32,000. Beginning is 6,800 plus purchase we don't know. We want to find ending inventory 6,000. So you just can find your purchase. Rearrange it. Okay. So 32,000 plus 6,000 minus 6,800. So we give you 31,200. Okay, so the answer is B. Okay, let's move on to question 28. What was the profit margin? Okay, what is the formula for profit margin? Profit divided by revenue multiply 100%. Okay, so they give you revenue, they give gross profit, they give you expenses. Okay, so how you find the profit actually? So profit actually, obviously you know, is a gross profit minus expenses. Okay, so means that quite easy actually. We can find already the profit margin. Okay, because how you want to find profit is net profit is gross profit minus expenses. So just 20,000 minus expenses 12,000 divide by revenue 80,000 multiply 100%. As simple as that only. Okay, so 20,000 minus 12,000, you get profit 8,000 divide by 80,000 multiply 100%. So this one will be 10%. Okay, 29. A trader provide the following information. What was the return on capital employed? Okay, what is the formula for return on capital employed? Profit. Okay, you divide by, basically profit is earning before interest and tax. Okay, so you divide by capital employed. Okay, how to get this capital employed is basically equity plus non-current liability. Okay, so profit they give you already. Profit is multiply 100% lah. Okay, okay, multiply 100%. So profit is 24,000 divide by capital, not working capital lah, capital 120,000 plus non-current liability 30,000 multiply 100%. Okay, so 24,000. Okay, so 120 plus 30,000 is 150,000. Okay, so 24,000 you divide by 150,000, and then you just multiply 100%, will give you 16%. Okay. Okay, next 30, someone a trader decide to issue statements of account each month. So which ratio does Samuel hope to improve by doing this? When you issue statement of account, means you issue to who? Issue to, okay, so you issue to who? To your trade receivable. Why? Because you want the customer to pay faster. So basically you want to improve trade receivable turnover. Okay. Alright, we stop here and then we continue in part 4.